Hello, everyone. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update, John. This is going to be a should I list it or should I wait segment. Let's first kick it off with actively updated supply, 6,455. Johnny, show me that chart.
Yes, the supply continues to rise in Manhattan. We're up about 1% or so from where we were last week. And if you look at that chart, you can kind of see that those bars, that trend in those bars is increasing. But let's forget about 2021. Let's go back to 2019. And when you look at that chart in 2019, right, that supply curve in terms of weekly new listings or the weekly count of supply seems like it's peaking right around now. So I'm not sure if that's going to hold this summer, but you know, the trend is up. But I would expect it to start ebbing soon if the prior year's trends are any clue.
Yeah, I guess that's because we're going into a summer slowdown, right? And that's when new listing activity tends to decrease. However, we'll take a look at where we are versus that average. It's an interesting point. We'll talk about it a little more in a little while. For now, let's shift over to pending sales. Manhattan measure of demand, 4,732. Looks like that's dipping. Show me a chart.
It's dipping. We're down almost 1% from last week, but these dips, Noah, since the last few weeks have been less than 1% each, right? 0.2% here, 0.5% there. So pending sales are really essentially going sideways. They're well below, well, not well below, but they're certainly below where they were last year, but they remain well above, I should say, from where they were in 2019, which is the last sort of real year we can measure against.
Yeah, and that's what makes me feel like we're topping out, John. That's what makes me feel like this thing, if I had to think of a force that is pushing this thing one way or the other, I think it's going to be pushing it down over time. It may take a little while to show it, but you're right. You're 100% right. We are at a high level. Liquidity is still there. There's still a lot of deals going on. And let's take a look at that right now. Let's go to the weeklies. When I look at supply, 467 things came to market in the last 7 days. Johnny, show me that chart.
Yeah, that's I don't want to say that's a big number, but that's a sizable number, right? That's 11% higher than where we were a week ago. And again, you know, I'm trying to, since we're easing our way back into seasonality, let's compare. How does that look against last year? How does it look against the year before? And it's higher on both counts. So supply is coming in at a weekly level, a little bit higher than expected here. And again, you know, we just talked about this with overall supply, with overall actively updated supply. Let's see how this plays out going forward here.
Exactly. Let's move on to demand. 1 week contract signed. This is like my favorite number on this program. 259 deals were signed in the last 7 days. That looks like it ticked up. Still a very good number. If you extrapolate that over a month, it's still over 1,000, but it's a lot lower than where we were a year ago. Johnny, show me that chart.
Right. So we're up roughly, as you said, about 1% from a week ago. But I think you hit the nail on the head, which is the shift in the market, the slowdown that people are feeling. To me, when I look at a chart like this, it's a lot more emotional than the data would suggest, because yes, this year's number on a weekly level for contract signed is well below where it was last year, right? I mean, we're down, you know, goodness sakes, 20% or so from where we were last year, if my math is right. But look how much we're still ahead of where we were in 2019. And 2019 was a decent year. I mean, it wasn't the best year the market's ever had, but it's in terms of overall average years, it was fine. So we're running ahead of average here, Noah, but it just feels tough because last year was just so gangbusters.
Yeah, 2019 was like a century ago, you know, at this point, you know, I mean, we remember in the last 3 months, 6 months, but you're right. A year ago, it was just urgency. It's the relative shock. It's the relative shock of the fact that we've slowed down significantly from that past point in time. And yeah, now it seems to be like we're going the other way. Totally fine. Totally okay. Let's move over to the chart du jour right now. And then let's have a little bit of a conversation because there's a lot of sellers. There's a lot of sellers out there, Johnny. Do I list? It's June, right? This is not the time to list. Right. Yeah. For the record, we've been putting out sales call in December and February were our 2 sales calls to not wait for this time and to get it out. But if you didn't see those calls, what do? Right. First, let's take a look at net new inventory trends. Right. Let's get another piece of the data puzzle in there. And when you look at net new inventory trends and you extrapolate what the pace is so far in June, right, that green bar 34, we're still green. We're still green. So even though we're fading, this is 4 months now of positive pressure on supply, Johnny.
Yes, that's exactly right. However, you know, this really starts in March, that first green bar on the right, the tall one, 417, right? That's the spring active season kicking in. We finally got supply on the market, 417. Next month, 206. Next month, 69. Now, currently, right now, we're 34. So that's a declining trend. So even though the pressure on inventory is sort of easing, and even though you're a buyer, you're seeing more and more stuff hit your inboxes, there's still a lot of stuff going away. So it's not as if you're listing, right? If you are to list, it's not like you're listing into a glut. You're listing into, for many buyers, what is still a tight market.
Yeah, and I just want to remind our viewers that 34 right now, that's the current number for June, right?
Yeah.
So we're 10 days into June, right? So we still have another 20 days of data left. If that pace continues, if the 10-day pace continues as is, that's going to be at 100 by the time we enter, right? So this number will not be this low. This number will probably be up here somewhere and stop right around there. We don't know. We don't know what's going to happen, but we do know the market has changed. We do know the market has changed. And when I look at over 2 million, that's in a negative.
Yeah,
so I don't know if there's something. Yeah.
Well, that's a little surprising to me, Noah. I would have thought that, with 3 solid months before it, I would have expected this number to be green so far, because, in terms of the listing activity, we saw more over 2 millions coming in versus what's going out for the last few months. But so far right now, that's sort of inverted. We've actually seen more going out than kind of coming in. I'm surprised by that. To put this back in the context, should you list or not? I think what this to me tells me that is, if you have something that does have something unique or original to it, and you're in that, mid to upper tier price category, it doesn't hurt to list right now. It seems like you are still listing into an environment in which you will be seen as unique.
Yeah, and here's under 2 million, and it's just hovering around the unchanged line right over here, but it is down. Listen, my opinion is, if you were going to list, right, if you missed the prime time, you missed. All right, you missed it. It was in earlier this year, January, February, March. That was the time to do it. But if you missed that, I say get on. I say get on the market right now, because you still got some volatility ahead. You still got a Fed raising interest rates. You still got buyers dealing with that. I think the demand pull, the sugar high that we talked about a month ago, is going to have a nice sugar low. And we're kind of even seeing the sugar low. It's just, I don't think it's the full sugar low. So I don't know where the market's going to be in August and September. Right? We might be a little bit lower, and I don't know what the stock market's going to be in August and September. We might be a little lower, right? And these are things that are going through my head. So in my mind, it's like, all right, I missed it. I'm not going to get peak. This is the confusing part for sellers. Sellers are going to look at comps and sales from the last couple of months. Be like, all right, I'll just get that level. That's changed. If you signed a deal in February and March, you hit it. Maybe even April, you hit it. You nailed it, right? If you didn't, and you find yourself now, you probably got to figure we're down a little bit from those points. And that's the finding the market part that's tough. That's where the bid-ask spread widens. And that's where we're in right now. So I would price right. I would get out of it, get in it, take a 2 or 3 percentage point hit from wherever we were a couple of months ago, and steer it clear and get it done now, rather than put it on the market in September. That's my honest opinion.
Yeah, and I think that's what this little tick up on the under 2 million is telling me. This plus 26, currently. And again, this is still early days. This number is most likely going higher based on this pace.
Right.
What it's telling me is that you're exactly right. 3 months ago, 6 months ago, right? 6 months ago, jumbo rates were 3%. Now they're 200 basis points higher. So there's a lot of factors out there that are influencing this. So you can't necessarily count on this rising tide of low inventory and low rates to sort of, clear this trade. This, to me, this little tiny green bar says you're going to have to compete a lot more closely on price. And I'm not saying you have to undercut the entire market, but you're going to, it's less about the story in this unit, in this market. It's less about the story of the apartments. Less of, individuality is important, but it's going to be, the price is going to absolutely be key this summer.
Yeah. And if you don't price right, you're just not going to sell. So, I mean, like, as I'm saying, you price it right and move it. Price it right and move it. Look at that active competition. That active competition is going to tell you a little bit more information when markets are shifting, right? This is the Donna Olshan method. Give a shout out to Donna Olshan. We love her, right? If the market is shifting or changing drastically, and those comps are no longer relevant today, it's going to be those active competitions that are trying to find the market that might drive your current value. So keep an eye on that. Johnny, thank you so much for pulling up all these charts. It's wonderful to get this perspective on the listing side. I'm curious what agents have to say about this. That is John Walkup. I am Noah Rosenblatt. We're both from UrbanDigs. Don't forget, you guys got questions, we got answers. We will answer them in the forum right over here. And if you want any of the reports that John whipped up today, they'll be right over here. Other than that, this has been your weekly Manhattan market update, and we'll catch you next time.